You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, Spike, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at myaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's going on in the world of volatility? Well, let's find out together. It is time for Volatility Views, the premier program for volatility traders, the program that, dare I say it, has cornered the market on volatility trading. You know who I'm talking to out there, of course. You can find this show and a whole bunch more at theoptionsinsider.com. Check out all the cool earnings move results, and earnings season reports. You guys have that available for you for free over there. Added some new wrinkles to that just this week, the earnings trades reports. And now there's some new reports breaking down how straddles and calendar spreads are working out this season. By the way, this season looking green for the first time pretty much since all this madness began nearly 2 years ago. So interesting times afoot out there in the earnings vol front. You guys can get it all over there at the website completely for free. And of course, if you want to go above and beyond, get not just all of our shows live, but also get in there for our pro Q&As on Tuesday. Coming up later today, options, oddities, and indeed get your chip in the hat for the cool Pro Trader Crate. We just shipped out a bunch of them. I spend too much money on shipping, but I must like you pro folks out there. Then go to theoptionsinsider.com/pro to get in on that action. We tweeted out a fun picture of just some of the stuff we've pulled from our vault. There's a lot, and some of these firms do not exist anymore. So these are complete one-off unique items you can't really get anymore. I probably should sell them. But instead, they go to you folks over there on the Pro. And of course, however you listen live after the fact, keep writing in your questions, your comments. We do love to hear from all of you guys and gals out there. And let's see who we're hearing from today. First, let us return once again to the global volatility mecca known as Austin, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, A, welcome back to the program. B, I was speaking with someone just a couple of days ago, a diehard, lifelong New Yorker who was also considering making the jump to Austin. So what's in the water down there? Everyone's got to go to Austin all of a sudden.
Well, you know, what I will say is it's 70 and sunny right now. How's the weather there?
A little bit lower, I'll just say.
Yeah, and you know what my income tax bill is going to be for this year? From Texas?
48%. 48.2%.
Zero. So, those are two good reasons to think about Austin. I miss Chicago, but I love it here. So go Austin.
There you go. Moving for tax reasons. This is the inner CPA in you, sir. And also joining us, it's been a while since he's joined us in the MyAx hot seat, Mr. Short Vol himself, a.k.a. Dave Lincoln of Short Vol Show infamy. Mr. Lincoln, welcome back to Volatility View, sir. It has been too long.
Thank you, sir. It's great to be back. And it sounds kind of nice down in Austin. I was watching a show on Austin City Limits a couple days ago. It's a pretty cool spot. Not only a music mecca, but like you said, some favorable tax implications down there.
Now, the one downside, David, the Italian food is terrible.
Well, you kind of figured that. But hey, maybe you can wait a while and the Portillos will come and at least you can get the quote-unquote Italian beef. And there you go. You'll be off.
Well, I can't buy an Italian beef, but I can buy PTLO.
Yes, you can. You can do that. As we keep on rolling, it is time to see what's lighting up the vol tape, sir. It is time for the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we do just that. We break down the week that was, and indeed still is, from about trading and trending and analysis, all sorts of fun perspectives out there. And coming into showtime, we are seeing the markets getting yet another lift here to end the week. Most of the major indices firmly in the green. The NASDAQ leading the charge yet again this week. NASDAQ's kind of been on fire of late. Up 0.75% when we kicked off the show. S&P up a little over 0.5%. And the Dow up about 1/3%. So the Dow playing the laggard role out there today. And interestingly enough, it's been an interesting week. I think we'll probably get to this a little bit later. We had a listener question about this. A lot of you were discussing this notion of, markets up and vol up. It's on top of the mind for everyone these days. Coming into showtime, we are seeing a little bit of a lift, at least from last week's show, across the board here. Spikes getting a little bit more lift, actually. It was at about a 17, right before showtime, ticked back up to about a 17.25. That puts it up about 0.5 point from where it was this time last week. VIX cash coming into the start of the show is at about a 16.5. That puts it up a little bit more than 0.75 point, about 0.8 point from where it was this time last week. VVIX up to about 110, puts it up 5.25 points out there. Of course, you can go diving deep. I still can't get it on a lot of my platforms. I've been looking to, hopefully it propagates soon, all the V spike out there, but you can go over to the MyAx site to get access to all of that good stuff. Let's go around the horn. Let's start in the MyAx hot seat. Dave, it's been a while. I think it's been since early summer since you joined us on the program. So obviously a lot has unfolded in the world of volatility since then. So maybe catch us up first. What's been lighting up your tape over these myriad months since you've joined us last? And then B, what's lighting up your vol tape this week, sir?
Well, it's been a beautiful year back to form for the VIX products with, them moving steadily lower. I think last time we talked, we were talking about, could UVXY go through 30? Could VXX go through 30? And we just plowed through those. The term structures looked real nice for the last few months. And I've gotten myself into the whole meme stock thing. So I'll be interested to talk a little bit about Skew and those stocks with you a little later. But and I think the meme stocks have really kind of shaken up financial markets and put some different aspects into the whole equation here.
So you're going to have a new show, the long meme show. Is that going to be the new show?
The short meme show.
So you're going to fade all the meme stuff. Oh, so you're a braver man than I thought, sir. You're diving in front of the retail madness out there. They're interesting stuff to get into. And Mr. Meatball, same question for you, sir. What is lighting up your tape out there in the volatility mecca known as Austin?
Yeah, we really did see a push higher in volatility earlier in the week, especially when the market was selling off. But even as we were down 50, vol never really got the crazy lift. It was a little weird. We rallied with vol for a couple of days, then we sold off, and vol seems to reset, and VIX is getting smoked today. VVIX is down. Skew has gone from 155 back to 140. And this market, and the S&P's up 30, and who knows where it's going to go. So we could see VIX back in the 15s early next week if this trend continues.
You mentioned the skew. You're right. It is pretty much exactly back where it was 2 weeks ago. Last week, we had seen skew rally from about 144 up about 7 points to 151 and change. And coming into today's show, it's back down 7 points to 144. So net on the last few weeks, we've seen pretty much nothing happen from a skew perspective out there. Dave, this has become an increasing point of conversation. In fact, we're going to talk about it again in a few seconds here, talking about how skew impacts all the other things we're talking about here on the show. But I'm curious for you, how much of a factor is skew these days and everything you're looking at?
I mean, I think it's a fascinating thing that's happened with that Susquehanna type report that came out last week talking about skew expanding with out of the money call buyers. It's a fascinating thing, and we have seen it also in the meme stocks. For example, the biggest options traded are these out of the money calls, and it's a new dynamic that's come to the marketplace. Obviously, we know that skew is reversed in the VIX products, but we've seen skew be reversed in some equities lately, and it's fascinating.
Now, let's just get to it. I was going to say this for the volatility voicemail, but it pertains to what we're talking about now. Is a question from Bolgers. A lot of people had similar questions. That's why I wanted to bump it up. He says, please, discussion on the program. Thank you much. I'm guessing English, perhaps not his first language, but we get what you're going for here, Bolgers. And he sent a link. A lot of people had questions about this article. I believe this was Bloomberg. They had an article coming out this week called Options Craze, Rewriting the Rules of VIX and S&P 500 Relationship. This gets to what you were just talking about there, Dave, about how we've been rallying and the markets, or I should say vol, continues to creep up. That tends to throw people in a tizzy when they see that over a sustained period of time. And we have seen sustained period, pretty much 2 weeks of straight rallies, at least in the NASDAQ out there. And, the old saw people usually throw around out there is that, hey, people are loading up on protection at these lofty levels, and that's translating into net higher VIX levels. And that usually is the case. But looks like Susquehanna has been crunching the numbers and kind of going back to what Matt Amberson from Orats has talked about here on the show and others. He calls it the Robin Hood skew. They just call it the, investors flocking to the cheap calls, whatever you want to call it out there. That factor, once again, in full form, getting back to levels in terms of net premium and everything else like that we haven't seen really since some of the early days of the meme explosion. And so what's happening is, of course, I've referred to it before as a bit of an upside crash. You're getting something analogous to that, and people keep bidding up the upside as you keep blowing through these strikes. That's effectively what you have, listeners, is you're rallying into higher levels of volatility, which is, again, not normal, not the way equity skew usually trades, but what really has been normal in the year that has been. In particular, they focus on the NASDAQ. Obviously, that makes sense. Tesla, NVDA are a lot of big names that are driving up NASDAQ there over the course of the past week. A lot of great visuals in this article, too. I encourage you to check it out. But again, they speak to effectively the FOMO. Everyone's got fear of missing out on this upside. So they're loading up and continue to load up on calls even as we rally higher. So we're effectively melting up into higher vol levels. And that effectively inverse skew to what we normally see out there is what's keeping volatility so elevated. They break down here the NASDAQ call skew was at the 98th percentile when Susquehanna crunched the numbers. And they're seeing similar levels on the 20 big tech names that comprise it. Half of them saw their call skew sitting in the top 5 percentile of not just 52-week range, but actually 2-year range. So going back to before the onset of the pandemic out there. So a lot of people were intrigued by this article. They wanted us to talk about it here on the show. Let's go around the horn. Let's go to the greasiest of meatball. Mr. Meatball, sir, I'm sure you saw this. It was the talk of VolTwit this week. What are your thoughts on this article and the fact that it's not really just the juicy puts anymore, but it is the crazy juicy upside that's keeping vol elevated?
I'm not surprised. When you see what's going on in Robinhood and on Reddit and the way they're reaching, I believe, another phenomenon out of this is that, for years and years and years, equity index vol traded at a premium to equity vol. That is a little bit flipped on its head. I believe equity vol is now more expensive than index vol, which is, not something we're used to seeing. So there's been this last year has been a complete upside downing of normal markets.
Dave, you're just talking about Skew, how it's more important to you than ever. We're seeing this crazy upside Skew wreak havoc with a lot of the metrics that we typically use to gauge and understand volatility. What are your thoughts on this, melting of upside and this FOMO driving everyone, particularly the small lot traders, into these upside calls and keeping vol bid as a result, sir?
Well, as you alluded to, in January, we had the kind of the start of this whole meme stock thing with GameStop exploding to the upside. And ever since then, every kind of big rally in the meme stocks, it seems like market makers will pop vol higher. And when they sell off, people will take vol lower. And I think that's kind of become the way it's being played now. And initially it was just because they got to such huge levels that people anticipated they were going to crash down. But now it's just become sort of a part of the marketplace that when the meme stocks start to move higher, they take vol up because they're anticipating more volatility, I believe, in the market. But it's a fascinating thing that we're just going to have to watch over time to actually really see what it really means.
Yeah, this is a scenario we saw obviously first really explode into the marketplace earlier this year. It kind of settled out. Then we saw individual names carrying a lot of these heavy bids to the upside, and that's been interesting trading for a lot of people out there doing things like verticals and covered calls and everything else flies that take advantage of juicy upside calls. Again, if this is all foreign or new to you listeners, I encourage you to go check out our options bootcamp episode we just did a few weeks ago called This Is Not Normal. It kind of breaks down how just insane these times are that we're all living through right now, and how some of the things that we know a lot of you, we just did a poll a few weeks ago, fully a third of you have started trading options since the pandemic. So this is all new to a lot of you, and a lot of you have never seen Skew outside of these levels. This is what you consider to be normal, or vol at these levels, or any of these other crazy things that are going on right now. And let me just encourage you and remind you, this is not normal. So check out that episode. It may help clarify a few things in terms of maybe what your frame of reference is versus what is traditionally quote unquote normal in the marketplace. You may be surprised at what you hear over there. Speaking of surprise, let's see if there are any in store for us out there in the land of the volatility futures. We just had Matt on from MIAX last week. He is the keeper of all things futures over there at MIAX, and he's been happy to let us know that there's still a lot of volume going up out there in the Spikes futures. Markets continue to tighten up. That's just a good thing net, because the tighter those markets get, the more volume they get, the more that translates into the options, which is where I know a lot of you want to and have been trying to play for a long time. And I'm with you. Spikes options were pretty wide. They're getting tighter, thankfully, and that's a result of these futures incentives. It makes it a little bit easier for you folks out there. You want to work a 10 lot and let's say at the money spikes put, something like that. They're more willing to come play and play your tune out there, which is always fun to see. And again, tighter markets, better for everybody out there. Let's go on out to the futures world. And like we were talking about with the overall vol numbers looking lofty or kind of similar to last week, same thing on the VIX futures. They're pretty much unched from this time last week. In fact, December is literally unched, and the November future was down about 1/10 of a point when we kicked off the show. I'm sure if we react to that now, it probably would be unched as well. And speaking of the numbers, we didn't get a chance on Option Block. The numbers came in this week. We just never got around to it. We were busy. But the numbers came in from OCC this week for October. Spoiler alert, another record month. Also, everyone who thought we couldn't beat the 2020 numbers, they beat them. They beat the total for 2020 just now here in October. So everything past this is now gravy. So it's another one of those years. No one thought 2020 could happen, and now they've already beaten 2020 and 2021. So insanity. But we're here to talk about the vol futures here. That's pretty much the only futures they clear at OCC. Total volume for last month, 4.4, almost 4.5 million contracts. It's actually a 33.7% increase from October of last year. So maybe a sign that the vol futures, from a volume perspective, are finally pointed in the right direction. You know, if you've been listening to this show for a while, that vol futures have kind of been dragging on the overall, derivatives complex. Everything else is blowing the doors off since the pandemic, except for the futures. They never really could catch a lift out there from a volume perspective. And we don't even have the new XIV listed yet, and they're already starting to catch a bid. So that's kind of nice to see from an overall volume perspective. Mr. Meatball, any thoughts on A, these volume numbers for October, a strong resurgence for VIX futures, and B, the overall, I guess you can call it, unchedness of the front portion of the curve this week?
Yeah, we were we're basically unchanged from where we were on Friday. VIX futures haven't moved. You're going to start seeing that November future, which expires on Wednesday, to get some real pressure if VIX stays where it is or drops further, which is entirely possible. December trading at a really nice premium to the cash index. So there's some money to be made in December options as well. So those are the two things I'm watching.
Time spread time. Mr. Dave, sir, what's catching your eye out there in the volatility surface this week?
Well, I think it's kind of interesting that in years past, we've always seen this big dimple in December, and it was huge last year too. And it was obviously the election year was a big deal, but there's no real dimple in December this year. Usually we would see the December future, creep lower, but the surface is really smooth. And as far as the lower volume, I think that retail customers who have made up a large portion of the added volume in the market this year have a hard time getting access to these futures as compared with other products. So I think that's part of the reason why there hasn't been the explosion in volume that we've seen in options and equities. But yeah, it's interesting to me that there's no dimple in December. There usually is due to the holidays and whatnot.
Yeah, a little bit of a different year than last year. Obviously, you're right. You had the crazy levels that we saw priced into the November election for pretty much the entirety of the year that we started the year talking about last year. Everyone kept saying, wow, look at this crazy bump in the October into November future period there. I recall our buddy there, the Oracle of New Hampshire, Mr. Matt there from Orats, coming out, I think in January of last year and saying that is crazily overdone and should be sold immediately. And then, of course, February and March happened and other things took precedence. But it seemed early on that was dramatically overdone. And then, the year unfolded as it did. Let's get on out to the land of the volatility options right now. Still seeing pretty much a similar size out there in the spike options, what we saw last week. That big three-way, the 2,000 lot three-way, still kind of dominating a lot of the OI. It was the NOV 20 puts versus the NOV 22-27 vertical. So that one actually looking decent out there right now. And let's see, the rest of it looks like most of your standard strikes, NOV 16 puts, NOV 18 puts. Oh, throwing a little love for the NOV 30 calls there for good measure as well. So a little bit of upside. Today, actually seeing a decent amount of paper on the tape out there in VIX options. 288,000 contracts on the tape. By the way, I gotta love our live chat while we're here debating vol and everything else like that. They're in there debating the metaverse. And if they could look like a giant dragon in the metaverse. I love you folks. Never change. Nichols says they should call it, what does he say? They should start calling it FOMO volatility for all these people bidding up the calls. Yeah, I'm with you. FOMO volatility. That probably would be a good term for it. But today, out there in VIX options land, 288,000 contracts on the tape. The ADV about 422. It's ticked up a little bit since last week, about 3,000. Not a huge change on the ADV front. Also, not a huge change from a top 10 perspective, at least in terms of layout. Still 60-40 puts over calls out there. The whole middle of the top 10 dominated by this call strip. And then the rest of it is all puts all the time. Cost you 115,000 contracts to break into the top 10 right now. That's not nothing. It's not enormous either. It's kind of average. That gets you to the D 16 puts. Number 9, 118,000 of the November 18 puts. Then we get to our call strip here. Number 8, $1.21 of the D 40s. Number 7, $1.30 of the Feb 65s. Number 6, $1.45 of my favorite still, the NOV 60s, even though won't be my favorite for much longer, about a week. And number 5, $1.46 of the D's 30s, and that's it for calls. The rest is all puts all the time. Number 4, $1.59 of the NOV 17 puts. Number 3, $1.68 of the NOV 16 puts. Number 2, $1.75 of the D17 puts. And rounding out the top 10 this week, 354,000 of the NOV 15 puts. Will we get there by next week? We shall see. I guess that'll depend on our crystal ball. We can't let the cat out of the bag yet. Looking at today's paper, like I said, 288,000 contracts on the tape so far. The big, most active contract today, the NOV 20s, with about exactly 20,000 contract on the tape, followed by also about almost 20,000 of the NOV 17. So perhaps a bit of some vertical action. Also, NOV 17 puts. So just 17s are active across the board. 19,300 of those. Number 4, 17,000 of the NOV 16 puts. And rounding out the top 5 today, 16,000 of the D 18 puts. Yesterday, a little bit more paper on the tape, 355,000 contracts on the tape. Number one, yesterday, the NOV 18 puts, 36,000 contracts. Number two, 25K of the NOV 17 puts. Number three, 20,000 of the NOV 20 calls. Number four, 17,500 the D60s. And rounding out the top five, there's always one of these strikes in here, listeners. And this week, it's the Feb 85s going up nearly 15,000 times yesterday. I don't know what it is about Feb that lures a lot of the, shall we say, optimistic upside, but seeing more of it on the tape yesterday. Wednesday, looks like it was, so far at least, unless today blows the doors off, the most active day of the week. 510,000 contracts on the tape. The most active contract on Wednesday, 57,000 of the NOV 20s, followed by 27,000 of the D16 puts. Number three, also 27,000 of the NOV 16 puts, so maybe some roll action there. Number four, 25,000 of the NOV 17 puts, and rounding out the top five on Wednesday, NOV 22s of 20,500. Tuesday, close in volume, 491,000, the most active contract on Tuesday. NOV 17 puts, 35K of those. Number two, 27,000 of the D20s. Number three, 26,000 of the NOV 15 puts. Back to that 15 strike. Number four, 25,000 of the Feb 27 calls. And looks like one of the few calls in the top five there. Number five on Tuesday, 21,000 of the NOV 18 puts. Monday, pretty much an anemic day, only 281,000 contracts on the tape. The most active contract on Monday, 21,000 of the NOV 15 puts, followed by number two, 13K of the NOV 20s. Number three, 12,000 of the NOV 16 puts. Number four, 11,500 of the NOV 21 calls. And rounding out the top five on a pretty light day on Monday, 11,000 of the NOV 30s. Mr. Meatball, anything catching your eye out there in the land of VIX options this week, sir?
Yeah, I mean, the continued action on the NOV 15s, I think, is really fascinating. A lot of gambling that VIX could crater. And those 16 puts. I noticed that a lot of the volume in some of the higher strike puts has moved out to December. They're starting to gamble on December vol falling significantly from a year. December futures. I noticed that you had mentioned those 17 puts. Those have been pretty active. And yeah, today we are seeing some decent volume in November upside. And November is actually pretty busy today. They're buying this. They're trading the 17 calls, the 18 calls, the 19 calls, and then, like you said, those 16s and 15s are busy again. 16s in particular are pretty busy. 28,000 of those on the tape as we speak.
Sounds like the mailman is there with my prize that I sent to you, sir. So look forward to that. Mr. Dave, same question for you. Anything catching your eye out there this week in the VIX options landscape? And also, I think all of our listeners want to know, how many of these Feb 85s did you buy yesterday, sir?
It's a shot. I'm just taking a shot. I noticed this morning it looks like we had a buyer of the December 1721 strangle, 1006, 13,000 puts, and I don't know if it's a ratio or not, and that seems just to make sense to me, that people would be, buying a little here. That maybe that's delta to the downside on that particular one. But yeah, I caution my viewers not to pick a level where you're going to say, I'm going to defend this level in the VIX, because we could certainly move way lower from here.
We were talking last week about a lot of people were trying to load up on those NOV 13 puts. It seemed like that was perhaps a bit of a bridge too far. So far, that has been the case. But again, anything could happen between now and settlement. Let's get on out now to good old VXX, a product you folks like to fade. Didn't get a ton of that fade on this week, as you might imagine. In fact, if you listen to our option block shows this week, from Monday's show to Thursday's show, all of the vol products were literally unched, down to the 10th of a point. They had not moved from pretty much the entirety of the week. And VXX and UVXY were both no exception to those. They were both unched. Coming into today's show now, we're seeing VXX down slightly on the week, down about a quarter of a point from where it was this time last. It was at about a 2040 earlier when we kicked off the show. So far now, got some decent paper actually out there in VXX today, about 216,000 contracts on the tape. That's actually north of the ADV, which is right around 200K. So VXX doing some paper today. I think I can see why. We'll get out there in a second. First, let's get to the top 10 out there in VXX land. If you're wondering, it looks like that has changed now. It was 50-50 puts to calls last week, so it's pretty even. This week, it is now 70-30, only 3 calls in the top 10. Let's break down the top 10 really quickly here in VXX. Number 10, 17,000 of the D's 30s, the first of 3 calls there. Number 9, 17,100 of the Jan 21 puts. Number 8, 18K of the VXX1, the only pre-split adjusted contract remaining here in the top 10. These are the Jan 12 puts. Number 7, I should say, 18,300 of the Nove 30s. Number 6, 18,700 of the Nove 21s. That's it for calls, listeners. Number 5, 20,000 of the Nove 19 half puts. By the way, when I say Nove, I think, all of these are going out next week, so no weeklies here. Number 4, 21, almost 22,000 of the Nove 19 puts. Number 3, 23,000 of the Nove 20 puts. Number 2, 23, almost 24,000 of the Nove 21 puts. And rounding out the top 10 this week, looking like this one may be hard, but again, we got time, a whole week to go, so anything could happen. The Nove 18 puts, 25,000 of these bad boys open out there in VXX land. In terms of what's lighting it up today, it's the Nove 21 calls. They're on fire today. 45,400 of those going up. So that accounts for why there's over 200,000 contracts already. It's a huge chunk of these Nove 21s. Nothing else is even close to that today. Number 2 is 9,000 of the Nove 20 puts. Number 3, 5,600 of the Nove 29 calls. Interesting. And 5,500 of the Nove 30s. Looks like maybe a bit of a roll down or just a vertical 29.30. That's a weird one. If that's what's going up right now, going out next week. And the top 5 today, number 5, we've got about 5,000 of the Nove 20 half puts. These are actually expiring today. This is the only thing I've mentioned. Actually, I take it back. The number 1 trade, the 21s, are also expiring. They're expiring today. Yeah. And these are opening. There's opening paper on the 21s going up today that are going out today. So is someone seeing something that let me just pull up here and pull up VXX again really quickly. See if this thing has rallied over it's pretty much right where it was. So, man, someone, I guess, taking a flyer or trying to harvest all that good juice here on that 21 strike. Let me dig into that a little bit. Well, Dave, you light us up. What's been catching your eye? You're Mr. Short Vol. You love these ever fadeable products. What are your thoughts on all things VXX this week, sir?
Well, I just think that is fascinating what you're just talking about. These Nove 21 calls that expired today. Open interest coming today was 10,000. They've traded 45,000 so far today. So that means there's a significant amount of opening calls. It looks like the highest they've traded on my time in sales was maybe 7 cents, but someone just sold a batch recently for 2 cents. Kind viewers, don't sell calls for 2 cents, even if they're expiring that day. That's just insanity to me. Why would someone sell all these units for 2 cents? You're just giving so much leverage to someone for nothing. I really don't understand that trade at all. I mean, I guess they're trying to harvest the 6 cents. Maybe I can understand selling a 10 lot for 6 cents with an hour to go, but thousands and thousands of calls for 5 cents, 3 cents doesn't make sense to me. It's crazy.
No, that's complete insane town. You're right. I'm just pulling up now to see what we have going up out here. You're right. I see a 6,000 lot for about 7 cents. They went up. Actually, they were 10-cent bid at the time when these went up. So someone's just hammering away. You're right. I see that now. 4,000 for 2 cents. Yeah, don't do this, listeners. Just don't. You don't want to be this person. I'll never forget when I was first kind of breaking into Intel out there after I left the SPX. And this was kind of the only other period I've ever seen that's analogous to what we're seeing right now, which is the late 90s, early 2000s, dot-com boom in full swing, everything going straight up, including Intel. That was kind of like the Tesla of its day. It was a hot name. And I remember we were going into expiration, and there was a guy next to me, older guy, one of the old timers there. And there was a crappy, it was a cabinet. In fact, it was like a penny bid, effectively, in some crappy calls that were a little bit out of the money, not that far. And I do believe we had earnings, after the bell and expiration as well. That bid was there all day, and we were all kind of laughing about what kind of idiot would sell these. And then all of a sudden, a couple minutes left to go in the day, I look up and that bid's gone from the book. And I turn around and that guy's standing next to me and he's got the biggest grin on his face and he holds the ticket up to me. I forgot how many it was. It was like 10 to something ridiculous, 20,000, a ridiculous amount that if we ticked up just a few handles, and that could easily happen back then, this guy was done. And he had kids in college. He had a wife. He had a house. He had a mortgage. It was different for a guy like me, a young guy. If I blow out, whatever, I live to fight another day. This guy had things to lose. And he just didn't care. I looked at him. I said, what are you, nuts? You have kids in college. You have a mortgage. You have a house. You're going to lose it all. This thing ticks. And he thought it was hilarious for whatever he made, the few grand he made on that trade. It was, yeah. So that moral of the story, listeners, do not do this. All right. That said, Mr. Meatball, what are your thoughts on VXX and somebody apparently not learning that lesson here in these Nove 21, sir?
You didn't like my sale? What the heck?
That's what the doorbell was. It was the guy delivering your ticket trade.
The guy delivering the ticket of me selling 45,000 of those.
You're big time. You're big time when they mail you the ticket and pay in person.
Yeah, the real-time ticket sale. Well, like I said, or I didn't say it all. I'm with Dave and you. That's just stupid. It's picking up nickels in front of a freight train, or in this case, less than a nickel. VXX is in continued pain. I wrote this up last night. If you bought VXX on the absolute lows of the VIX when it closed 15, all right, and you held it, you're now down money. That is the problem with these products. You have to understand how they work and that they are day trading products. They are not buy and hold.
They are not indeed, and that goes double for UVXY. Let's see, coming into today's show, decent amount of paper on the tape out there in UVXY. By the way, it's at about a 15. Looks like it was about a 15.35 when we kicked off the show. It has dropped to about a 15.20 or so as we've been gassing on out here. Today, about 117,000 contracts on the tape. The ADV is about 168. That hasn't moved in a couple of weeks, which is kind of weird. Getting out there to the top 10, a little bit of evolution in the top 10 as well. 60-40 now puts to calls out there in UVXY. That's from 70-30 last week. Let's just do a top 5 out here because we're kind of coming up against it here. Top 5 here. We've got the NOVE 15 puts, 10,500. Number 4, 10,600. The NOVE 16 puts. Number 3, the March 60s, 6-0s, 16,000 of those, followed by number 2, 17,000 of the Jan 75s, and number 1 out here, 19,000 of the NOVE 16 calls. So intriguing stuff out here in terms of what's lighting it up today in good old UVXY. Let's see, NOVE 16 calls going out today. Those are also going up 16,000 times. I don't think those are not opening. I hope it's not our same friend just taking out all the bids to the upside in both of these products, but I've seen crazier things. Number 2, 7,700 of the NOVE 16 puts. Number 3, 6,000 of the NOVE 15 puts. Those are actually expiring next week. Everything else looks like it's this week. Number 4, about 5,000 of the NOVE 15 calls. I take it back, 5,000 as well for number 5 of the NOVE 16s expiring next week. Mr. Dave, is UVXY? I know for a long time there I used to give you a hard time because you were kind of the lone UVXY defense force out there. But, times have evolved. Products have gone away. UVXY is kind of the last of the Mohegans. Do you feel more vindicated now in your long-term love of UVXY, sir?
It's got decent volume. I mean, not too bad. So I'm kind of wondering, just speculating here, what if that guy were to sell the 20 calls or 21 calls in VXX and buy the 16 calls in UVXY against them? Would that be a good spread, maybe?
You're
right. It's got to be the same guy that's doing this stuff. Right?
I'm looking at, yeah, correct. Somebody is buying the 16s right now in UVXY. I paid 4 cents for those. So you sell it for 6.9 cents. You buy these for 4 cents.
I don't know. I'll buy some. I'm not selling any.
If that's the case, he's doing it on a size ratio because only 15,000 of these have traded in UVXY versus what 45,000. He's doing a 3x ratio, so he's still playing with fire. However he's doing it there. But yeah, that would be interesting. I've seen weirder things. Mr. Meatball, sir, what's lighting up the tape and the tapes of your crazies over there in UVXY land? And did you get any tickets delivered on this one recently?
No tickets on this one. I'm a straight seller. I'm not buying those UVXY. Why bother? Why hedge? That's what I always say. And yeah, we've got some decent activity on the November 15.5s and the November 15 puts. Vol is coming off a lot in UVXY. There is a lot of premium selling going on today. I've got it down almost 12 points. So there is definitely puts are offered today. Options are offered, for that matter.
Options across the board are offered. Yeah, 'cause someone's buying those 16s for 4 cents. Swinging, a lot of swinging of the dice to close. This is like old school expiration day, back when there was only one expiration once a month, and these crazy people would show up out of nowhere that you've never seen before just to trade for that one day, and they would put on all this weird stuff, and it was a very, shall we say, high risk lifestyle. And yeah, you don't see that much anymore, but these days maybe making a bit of a recurrence in the digital world out there. Let's get on out to the thing that's driving a lot of this vol out there right now, which is earnings. It is a hot and heavy rock'em sock'em robot season. If you listened to us earlier, listeners, you know I was saying this, Matt was saying this for a while. It seemed like everything was indicating we were in store for a pretty bang 'em up season. That's pretty much exactly what we're seeing right now. Let me break down a few of them. The most recent earnings move results reports. You can check these out for yourselves. TheOptionSider.com. Go to the earnings, or I should say options, news, and articles tab to begin your journey there. Let's hit on a couple that just popped off. Beyond Meat on the 10th after the bell. They were priced at about 94.5. Excuse me, they were pricing in 9%. They delivered 16%. Again, this is immediately after the earnings. Obviously, if you hold them through till right now, that frame of reference is going to change a little bit. Disney, 174.5 is where they were printing. They were pricing in 4.5%, and they gave up right immediately after that. They gave up nearly 8%. Let's see. Have they recovered some of that right now? They're at about one. Actually, they're still lower now. So they're at 159 right now. So they've fallen another 2 points from that level. So they dramatically outperformed their straddle out there. Bumble out there, the ladies dating service, 47.75. They're pricing in 11%, which is already rich. They delivered 17%. So apparently the lady love business is not right. And they're off another 210 today. So yeah, they are demonstrably off. They've lost a lot more than 17% now since then. They're trading 36.5. They were 39.5 when they crunched this report. So another $3. Wow, that's rough to the dark side. After them being, one of the hottest IPOs, everyone was so excited about Bumble. Apparently, the worm has turned a little bit out there. But what is also turning is the season. Check out the earnings season report, listeners, because we have not seen this for some time, which is green on the season and multiple weeks that are green. Let me break it down for you really quickly. Week 1, 108%. I was excited. Matt was excited. He came on the show, as you remember, saying, hey, we're in for it. This is going to be a good season. Pay attention. And it seemed like he was right for the first week. And then week 2, it fell off a cliff, 57%. And it was like, uh-oh, we're going to see another one of those seasons. And then week 3 recovered 91%. Week 4, 120%. One of, if not the best weeks we've ever seen since the pandemic began. Week 5 right now, 104%. All that green means, listeners, it averages out to 102%. So this is the first time since the pandemic began that if you bought this crazy fictional basket of straddles I always talk about here, you actually made money. You made about 2%. So you've been losing your shirt pretty much for nearly 2 years, and now you made 2% back. So congratulations to you. Also, new addition to this, the earnings trades report. Check it out if you haven't. It talks long straddles. It talks short straddles. It talks long and short calendar spreads. Probably going to add more trades to that as well. How those have performed, what names they're putting them on. If you're going to do this, allocate some time to it. There's a lot of dense information here, listeners, but you can't beat the price. It's completely free. If you are at all remotely intrigued by anything earnings volatility, you owe it to yourself to check this out. Really, until I strong-armed Matt into doing this, this data wasn't available. It was stunning to me that no people were putting this out. This was something people would ask us for routinely, quarter after quarter. Hey, how are these earnings straddles performing? And no one crunched the numbers. And so Matt had the data. I kind of twisted his arm into doing it. And lo and behold, you guys get awesome free reports. So if you're not taking advantage of it, you are silly. TheOptionsInsider.com. Click on the options, news, and articles tab. Let's look really quickly here. We got some names popping off. We've got NVIDIA next week. 294.5 is where they were as of this report. They're pricing in $18.5. In the past, they moved 14. Given what we've seen out of NVIDIA lately, can anyone argue that isn't the right call? Baba, another one. Everything Chinese is volatile these days. They're on the 18th before the bell. 164 is where they were trading as of this report. Get this, listeners. They were pricing in $9.5. In the past, they've moved less than 5. So they're pricing in almost double. And again, given what we've seen out of China lately, you can maybe argue that is not enough out there. A bunch of tickers popping off in the next couple of weeks, listeners. You can check them out for yourselves. TheOptionInsider.com. Before we roll on, Dave, you said you're looking at a lot of single names these days, including a lot of memes. What's lighting up your tape out there these days, sir?
Sorry, I was muted there for a second. I've been trading, the GME and AMC. So I've been following that industry and was interested with Disney as well, with the movie theater industry. But those are the main ones. Obviously, we haven't mentioned Tesla yet in this program, but Tesla's been talk of the town the last week or so, with the tweet going to Elon Musk selling 10% of his holdings and Tesla tanking on that news.
Can we discuss the fact that Elon filed to sell in September?
It was all a lie.
Twitter poll was a load of hooey.
Yeah, it was all a lie. I love it. I love it. The guy, if he's the master of anything, it is getting hype. And it worked. He got hype over a planned stock sale. I mean, who cares? But apparently people do when it's on Twitter. Since you invoked Tesla, Dave, it is all your fault, because now we have to talk about him. It is time for the Volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right. Dave did it. He invoked Tesla, so we have to go out there. Fortunately enough, our question of the week, listeners, pertains to that uber hot name out there. We asked you, Tesla on fire again. So we had to bring back one of our favorites. Haven't done this one in a while. And clearly we have a lot of new listeners, because people don't know the answer. By this point, I know some of you hardcores. That's why you putting it in the chat out there. I think Unlimited and Luigi and a few others, probably Frank, that you guys know the answer. You guys have been around for a bit, but the new folks clearly do not, looking at the results here. But we asked you quite simply, what do you think is the largest open options position in Tesla right now? No cheating. Use your gut. Dave, you invoked Tesla. So we gave our listeners 4 choices. We gave them the March 2023 2,000 calls, the Jan 2024 1,400 puts, the November expiring today, the 12th 1,000 puts, and the June 2022 1 puts. By the way, I will clarify, all of these are real sizable positions in Tesla. We made up none of these. It's just a question of which one is the big dog. Dave, what is your guess? And more importantly, what do you think our audience is guessing?
I already knew the answer to this, so I'm not going to guess. But let me just say, I do have a friend who trades a ton of out-of-the-money options in this one, and he so far has not gotten burned. But I know the answer, so I'm not going to say. I'll defer.
What do you think our audience is voting for there? How about that?
Maybe the no 1,000 puts.
Interesting choice. Mr. Meatball, same question for you. If you have a guess, have at it. And then B, more importantly, what do you think our audience is voting for, sir?
I think I gave my guess on Option Block on Monday, didn't I?
You are free to reiterate or change if you like.
Yeah, what was it, the 1 put or something like the 10 put that I had said?
You want the lowest put? You want the June 2022 1 puts? Well, that is your. Yes. What do you think? Our audience is voting for that as well?
I think they're going for the. What do you got, like a 3,000 call or something in there?
2,000 calls? Okay, yeah.
Yeah.
Okay, I'll give you that. And that is exactly what our audience is voting for right now. 46.7%. This has a little bit of time left. I'm going to reveal the answer now, though, listeners, because it's fun. The March 2023 2,000 calls are at 46.7% right now, followed by number 2, the Nove expiring today, 1,000 puts, 29.9%. Number 3, 13.9%. Are the June 2022 1 puts, and 9.5% for the January 2024 1,400 puts. And a bunch of you have piled in with your answers. I could tell a lot of you are new to the show, because if you've been listening to these shows forever, you know what the answer is. It's always the same. It is the June 2022 1 puts. I forgot how many of these were open when we did it. I'll pull up the numbers, but it was it's like 150,000 of these were. It's like nothing's even close to these things out there. I could see why you might guess the March upside. Some of you might even guess the near-term Nove downside. I can see that. But it's June 1 puts. Whenever we do these polls, listeners, Jan, June, whatever the month is, if you see a 1 handle in there, that's 99.9% of the time going to be the winner. It has been since we started tracking Tesla options years ago. In fact, our buddy, the Flowmaster over there at Trader Alert, he created a custom Tesla downside search just for us because we did so much of it out there. So yeah, I revealed the answer. If you're not listening live, you don't know yet. So keep voting over there at options. If after the fact, the poll's probably done. So if you've already voted, you can't go back and change your vote. So nana boo boo to you. But yes, you folks need to pay attention to the archives because it's pretty clear. Well, in fact, I will just pull it up right now. It has not changed, obviously, since the last time we did this poll, even though the number that matters is Mondays. Here we go. All right. So yes, 147,000 right now of the June 1 puts. The number 2 position out there are the Jan 1 puts with 83,000 open. Number 4 are the aforementioned March 2023 2,000 calls with 74,000 of those. Number 4, now we drop off a cliff. The Jan 20 puts, only 39,000 of those. And number 5, the Nov 1,000 puts expiring next week. 37,000 of those. The Nov puts expiring this week, only 22,000 of those are open. So yes, it is orders of magnitude more for the June 1 puts. If you add in the June and the Jan 1 strike, you're talking close to 250,000 contracts. Nothing comes close to that. So yes, that is still far and away the size position out there in Tesla options. But now it is time to get difficult. Dare I say it, it is time to get dangerous. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, let's do it. Let's dance. Let's get dangerous here on the show. And coming into the end of the show, we have spikes back down. It was at about a 17 and a quarter when we kicked off the show. It's at about a 17 now, about 17.05 out there. So it has come back down a little bit since we started the show, pretty much back to pretty much where we started. VIX down to about 16 and a third. So it actually has given up some of the ghost. And oh my goodness, 1634 right now in VIX cash. My guess for this week, listeners, 1635. Wow. That's well within our 0.1 bullseye frame of reference, listeners. I'm going to take that one. Winner, chicken dinner. Wow. 1635. I haven't had a nice bullseye in a little bit. So it feels good, listeners. It warms the old cockles of the heart. The meatball was nowhere close. He was at a 15.15. And Matt from MyAx was a little bit closer, but still below me. He was at a 15.75. So, wow. Yes, I will take that. Like I said, it feels good. I used to have a lot of these. And then, this year's been a little crazy. So nice to have a nice bullseye back in my camp, listeners. Some of you others were kind of all 17 and a quarter. Not bad, JJ. You're looking better on spikes than some others. Athena, the goddess of wisdom, was not with you this week, Athena. 14 and a half, so a little bit shy there. Super VIX, another multiple 17 quarters. Everyone had 17 quarter. Munster was at 17. Ooh, not bad on spikes. You got it on spikes there, Munster. JVC 16 half. Also not bad, man. A lot of people who were close. Mensa 15.2. Todd 16. No. 216 halves. We may have to sort out here. Luigi 15.15. Options Queen 15.75. Looking not bad there. Options Queen better again. Frank 14.80. Nichols. Look at you, Nichols, coming in and trying to scumbag people. 15.80. Not bad for all of you out there. But yeah, we'll have to have our producers check here on Super VIX and looks like Super VIX and Munster and maybe JJ, maybe a bit of a three-way battle. Maybe if one of them was the closest. If you got to be within our margin of victory, remember, 1/10 of a point, listeners, to qualify for great prizes out there. But 3 of you are in the running, so our producers will check in with you and hit you up if they think you won. All right, now it's time for this week. Time to get difficult and get dangerous. I blew it out of the park this week, so I shall reserve the opportunity to go last. I shall sit back on my bench and watch all the peons vie for my throne. Dave, you are our guest. You get a pride of place to go first this week, sir. What are you feeling for Vol this time next week?
Well, congratulations, Mark, on the bullseye. That's awesome. And I'm going to hedge my short delta with a lower VIX, and I'm going to go with 15.15 again.
What a surprise.
Lower.
Mr. Short Vol would go lower. What a surprise. You're living up to your branding there, sir. Well done. All right, Mr. Meatball, you are next, sir. The floor is yours. Let us see. Let us see if you can come for the king. But remember, you come for the king, you best not miss, sir.
All right. Well, I got to bet against my book, which means I'm going 18-18.
Oh, I got a feeling that you may miss the king with that one. We'll see. 18-18 says the Meatball. So, wow, we got a 3-point range out of the gate here, listeners. I could dive in and have all sorts of fun. Like I said, we're at about a 16-30 odd in VIX and about a 17 exactly in spikes right now. Again, you know, we are in this weird phenomenon where we are kind of melting up. So that is kind of maintaining things a little bit. We have seen when we got down to that mid 15 handle in spikes and VIX, we have seen an aggressive bounce off those levels. So we could see some erosion. I don't know if it'd be super. I don't know if he hit Dave's level. I would be surprised if we hit that and didn't bounce off that again. But hey, crazier things have happened. Let's see. I was at a 1635 this week. That level, I think we're going to be a little bit shy of that. So I'm going to say 1585 for this time next week. There you go, listeners. Put it in the book. Place your bets now because that's where you want to be for this time next week. All right. That music means we've come to the end of another fun journey for Vol Views. I see the guesses are coming in already in the live chat. So we got a 1605. Okay. Interesting. 15.7. A lot of people in that same range. Options Queen, what are you doing to me? You're carping me by a freaking dime. All right. You don't count. I'm just kidding. You've been pretty prescient of late, so that must mean my guess is pretty good. A lot more of you coming in. Get at us. If you're listening after the fact, hit us up. You can send them questions at theoptionsider.com. You can send them at options on social media. Get involved. Get in the game. You can't win if you don't play, and then you can win some fabulous prizes. It's always fun. We're just nothing but giving out prizes over here these days. So take advantage of my largesse. Make me ship you something. Why not? All right. Let's go around the horn. Mr. Dave, if folks are intrigued, they want to talk some short vol with you, where should they go? What should they do?
All right, so I'm going to plug for once. I have a Facebook group called VIX Trade, which is, I believe, the largest volatility trading group on Facebook. Or you can reach me at David Lincoln YouTube channel or at the famous FAMIS Dave on Twitter.
So that group was VIX Trade? Was it Vol Trade? What was it called again?
Facebook/group/VIX Trade.
VIX Trade. There you go. Check it out, listeners. You can chat short vol with Dave. You can tell him why you want to buy vol. He can tell you why he wants to sell it. It'll be a good time out there. And of course, he can also tell you why he's selling all of that VXX upside right now. He can explain himself to you. All right. And Mr. Meatball, sir, when you're not busy getting hand-delivered order tickets, sir, where should folks go if they want to get some vol learning on?
Yeah, go to optionpit.com. I write a VIX blog every single day worth a read. It's called the VIX Edge. Give it a read. You will be happy and better for it. Go to optionpit.com and sign up for that sweet newsletter.
Optionpit.com. He says he'll make you a better person. Put him to the test. Optionpit.com is the place to go. And we got to go on out of here. But we'll see you back here later today for Options Oddities. And then, of course, that's all of you in the secret club, of course. And then back again next week, another episode of Volatility Views. We'll see you then.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about spikes at myaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.